we had another 0.25% increase in July.
You know what? That caught a lot of people by off guard and surprised. A lot of economists were thinking there will be no rate hike.
I think that people got a little bit more shook up because of that quarter point that we weren't expecting.
Off guard.
When we look online and we're reading through everything, there's a mixed opinion about what's going to happen.
Yeah.
So what do you think? Hey everybody, it's Hussein Kabani, your favorite broker, and guess what? We're back with Varan.
Thank you for having me.
And this time, he didn't wait in his car until I had to force him back into the office. He actually came in on his own will before I had to force him out of his car.
Because you were late.
Yeah, because I'm late. Yeah, and I didn't have to force you in. So this is all good stuff to start off with. Awesome. So today I'm here with Varan because we haven't done any talk recently about mortgages and interest rates, and we know everybody's talking about interest rates right now. So there's a couple of things that we wanted to kind of cover and ask the expert about what's going on. So without further ado, let's just jump right into it.
Yep.
All right, cool. So we're going to put you in a hot seat.
As always.
As always.
Yeah.
Okay. So what's going on, man? We had another 0.25% increase. Right?
In July.
Yeah. Something that you and I both kind of talked about and said that, I don't know if it's going to happen.
You know what? That caught a lot of people by off guard and surprised. Even a lot of economists were thinking there will be no rate hike, especially the month of June. Inflation number was historically low, almost at 3%. So maybe it's a tightening. They really want to slam the brakes on it. It's caught a lot of people off guard.
Yeah.
Probably, I think your next question will be what's going to happen in September.
Well, yeah, September 6th, right, is the next Bank of Canada announcement. And when we look online and we're reading through everything, there's a mixed opinion about what's going to happen.
Yeah.
So what do you think?
Once again, it's opinion.
Yeah.
I know there's a lot of feedback on that, so it's an opinion. I really don't think there will be a rate hike, especially the inflation has come down to 2.8.
Yeah.
That's including the high borrowing cost or high shelter cost.
Right.
So there's a lot of economists there stripping the shelter cost out of it and trying to run the inflation without it, and it's almost at 2%.
So we're basically there at that target
number. We are basically there, right? So how I feel like it is when instead of putting the fire down with the water, they're putting kerosene into the fire. So I think one of the economists put it in a nicest way. They're putting a dehumidifier and the humidifier at the same time.
Yeah.
So based on what's happening, I don't see a rate hike, but we probably have a better idea tomorrow. Today is August 3rd.
Yeah.
So tomorrow is August 4th. I think the unemployment numbers are coming up.
Yeah. So I think that there are a couple of other factors that would affect whether they're going to increase it or not, right? To be honest, I'm looking at it and the Ukraine war is a big thing that is still on the horizon, disturbing supply chain and whatnot. China's economy is another external factor that we're looking at. And then again, like you mentioned at home as well, is what's happening with the employment numbers and where our inflation numbers are. But there's so many different variables over here, and a lot of it is external stuff that's happening. So Canada obviously has a couple of things that that's related to the country that they can try to control.
Yeah.
But then again, there's also a lot of external things that we're not going to be able to control.
Yeah, the employment numbers are high. That's also due to high immigration as well, right?
Yeah, true.
So it's surprising to see what the numbers going to look like tomorrow.
You know what? Good point. So employment numbers are higher because of our immigration.
Yeah.
Our inflation is higher because of our higher interest costs.
Absolutely.
So it's just
and also part of the immigration as well, right?
Yeah.
So consumer spending.
Well,
right?
that's true. Our consumer spending is high. So, good point. I never actually factored that in. So, shouldn't that be something to be revising numbers by at the same time as well? Because you have this influx of population now.
I think there's no alignment between the Bank of Canada and the Ministry of Immigration. So there's no alignment. So they are the government is supporting the immigration. The Bank of Canada is not looking.
They're saying, I don't care.
I don't care.
I don't care.
They just want to control inflation. They want to bring the immigration to grow the country. So there's no alignment. I think
there's a big disconnect between these departments, right?
Yeah. Huge disconnect, right?
Okay.
But I'm not trying to be positive. I'm not trying to say there's not going to be a rate hike. In my opinion, I think there will be no rate hike.
Well, you know what's going to happen with this video now, right? I'm going to get about 7 or 8 comments that says, well, you guys are greedy realtors and mortgage brokers encouraging everyone to buy, and you guys are going to be crying soon because that's Chris, right? We got that comment. You saw that comment? Yeah. So we had a huge comment where somebody's basically like, you guys are just scammers and
100%.
encouraging everyone to buy.
Yeah.
And this is going to be the worst thing, and it's going to go on for like 20 years.
And I would like to comment those comments in 2 years from now, or maybe in a year from now.
Yeah.
I
for sure.
hope those comments stays, and we can literally go back and see
I've
what
screenshot
those
them.
people
Yeah.
has gained,
Yeah.
or what's the advice they should have took it right now.
For sure, yeah. And I mean, like, again, just not in terms of like trying to push people to buy, because that's not what we do. We don't push people to buy. We help people that want to buy and sell real estate facilitate the transaction. Yep. That's essentially what we do. We can't force somebody to sign a contract. We can't force somebody to have an idea of buying real estate. They have to make that decision, and all we're here to do is facilitate that transaction, right? And to that point is that, and I tell a lot of people this, is that if we look at historical data still, like in almost any 10-year segment in Toronto Real Estate Board, we've basically doubled in real estate value.
100%.
So what do we think is really going to happen in the next 10 years or 5 years, 10 years, 15 years? Like if you think in a mindset of where you are, like the market is at the lowest point it's going to be, and you're still struggling to get into the market, and then you're complaining, it's not going to get any easier. I don't think so.
I think I shared the graph. Apparently, the 4% hike from last week this time to last week of July, or end of July 2022 to end of July 2023, the price has gone up 4% in Toronto, even though rates has gone up by 10 times.
Exactly. So that's telling us that there is still a lot of confidence in the market. Right? I mean, obviously, with anything like this, we're always going to have the naysayers that say, oh, it's not going to happen, it's going to go down, and whatever else like that. But it seems like majority of the people are still feeling very confident in the market. Yeah. Okay, cool. So like basically we're both kind of saying that we don't think that the rate is going to go up again in September. Opinion. Yeah, definitely opinion. And this is not for anyone to do deals with us. It's just what our opinion is of what's happening. And what about like the rest of the year moving forward? Like, do you see kind of any rate changes this year, up or down?
So I read a graph or presentation by Q4 of 2024, there'll be a 1.5% rate hike. So this is combination of all the major banks. I think this presentation was done by BMO.
Okay.
So they're predicting a 1.5% rate cut by Q4 of 2024. So that's been October 31st, 2024. So
basically in the next 15 months is what they're saying. They're going to have a 1.5% decrease in rates.
Yeah.
Okay.
That's a prediction from the major banks.
Sure, and I think that's pretty common for a lot of the articles I've been reading as well, is that basically this year we're not going to see any kind of reduction.
Yep.
And a lot of the articles I'm also reading is we're not going to see any more increases either.
Exactly, it's going to be balanced.
Yeah, it's going to be basically balanced.
I feel like a lot of positive articles are coming about the stability of the market over the last 1 month or so. Do you feel the same as
100%.
well?
I think it's especially when that inflation number hit 2.8%. I think a lot of people have that confidence. I think that people got a little bit more shook up because of that quarter point that we weren't expecting.
Off guard.
But it still didn't slow down our transactions, and people are still willing to make trades. And now that if we see the interest rate kind of stabilize, I think that there is going to be that much more consumer confidence in the market at this point right now as well. Okay, cool. So we're expecting, so when do you think we will start to see that kind of in the back half of next year?
I would say end of the spring or early summer to see some kind of rate cuts.
So kind of in the end of Q2, going into Q3, somewhere.
Yeah, the bank's Q2s are different, right? The bank's Q2s a bank Q1 start on November 1st, right? So probably end of spring, early summer.
Okay. Yeah, I kind of tend to agree with you, because I think that the spring market, I feel like we're probably going to have a pretty good spring market next year as well. Because the way that the inventory is looking right now, we're sitting at just under 16,000 listings available for sale.
But that's significantly high from what we had in April.
So at the beginning of the year, we were about 8,500 listings available for sale.
So that doubled pretty much.
Yeah, basically doubled. At the end of July, we peaked like 16,000... 500-ish or something like that. And now we're kind of around that 16,000 number again. What ends up happening is at the end of the month, a lot of listings kind of expire because people have expiry dates at that point. But the key thing is that now I've been watching for the last 3 days, and I'm seeing that the inventory is actually not increasing again. I mean, we have a long weekend coming up, so there will be people that will probably hold, like we're holding 2 listings to hold until the end.
After the
long weekend to basically put them up. So I'm sure we'll probably see inventory go up at that point. But I think think what we're probably going to end up seeing is that inventory is going to start to probably come down in August.
Yeah.
And then in September, I think we'll probably see a little bit of a fall. And then our inventory position should be pretty stable through the winter time. And I think that will cause a spring market again. And I think the rates that probably won't change because they don't want to lower them at that point because I think it's going to create more of a buyer frenzy in the springtime.
Yeah.
So probably after the spring buying season is done, I think you're right, is that at the end of June into July, that's when we'll probably start to hear about rate cuts.
Well.
Yeah.
What are you seeing about these leases? Like rents has gone up significantly, right? Multiple offers on leases.
Yeah, multiple offers on leases. It's pretty crazy. I think that if you have holding power with your real estate and you can wait a month to lease it out, I think you could probably get $150, $200 more than what you think you could probably get just because that person's going to come around eventually and someone's going to like that property. There's a lot of demand out there for leases. We're seeing multiple offers going in on leases as well. And we don't see it cooling down. Almost every month over month, we're seeing a little bit of an increase. Like when I say a little bit, $100, like $50, $100, but guess what? It starts to add up, right? We're talking about year over year. We're saying like, hey, maybe $500 increase on your rent.
By in 6 months.
Yeah. Yeah, exactly.
That's a big number.
It's a huge number, and you know what the thing is that also talking about rentals, I think that people that are not have properties that are not under rent control are going to take full advantage of this 100%. Thing, right? While they still probably can, because if your property was November 15, 2018, and later occupied later than that,
there's no rent control.
Then you don't have to follow the landlord-tenant board. And based on how much your interest rate has gone up, I think, and the market has demand out there.
So you can be par.
Exactly, so you could try I told you I was at TD yesterday and I was trying to do some stuff and I just happened to ask them about my mortgage because I see accrued interest in one of them. And basically they told me that if I put even $100,000 against my payment, a prepayment, it's not going to change anything. So I basically went from like 28-year amortization to 63-year amortization.
But the thing is you have to keep in mind when the mortgage comes up for renewal.
Yeah.
Your payments are going to be reflecting based on the balance on the mortgage.
Yeah, balance of the mortgage. Yeah. So
right now it'll be a payment shock.
Yeah. So what I actually ended up doing was figuring out exactly what my interest payments are right now because that's all I'm paying. Yeah. It's an income like a rental property. So I just increased it right up to whatever my interest payment is. So at least I can kind of stay at par of what my balance is.
That's why I tell the clients when they call me and they talk about the investment property, I say, if I were you, I would not do anything. That's exactly what I'm doing as well.
Yeah.
I have a lot of families in England, and in England, everyone carries their mortgage as an interest-only payment.
Yeah.
So for investment properties, and you write off the interest. So I wouldn't sweat for investment property.
As long as you can kind of hold it, right? Like
you are buying for appreciation.
Yeah, exactly. And that's the thing. Like, and it depends on what you believe. You know what I mean? It's not to try to convince anyone to get into the market right now if they're not comfortable with it and if their beliefs are different. But, I think we're both in the same boat where we think that real estate will rebound in a big way in the next, let's call it 5 years even. Yep. And it's not worth for me to sell any of my real estate at this point right now because I'm just not going to be able to replace it. So I'm better right now maybe taking a couple of shots and just saying, hey, I'm going to figure out a way to kind of hold on to this stuff.
Exactly.
Yeah.
Until it's kind of where is the right time to do any transaction.
Yeah, absolutely. So the rental market's crazy. Don't see it easing off at all, especially with the immigration that we have coming in. And it's going to be in the city centers as well, right? Yep. Like a lot of people will move closer to downtown Toronto into the Vancouver markets and stuff like that. When they immigrate, they go to kind of like Vancouver, Toronto, Montreal. They kind of stick around the center until they figured out the geography of the place, and then they kind of move back, move into the suburb maybe 2 years kind of after they've immigrated.
Absolutely. Talking about the center, I think you and I talked about the condos are coming up in Pickering.
Yeah, Pickering condos are coming up. I think that's going to be a really, I'm so pro Pickering, so I think that's going to be a really big thing.
Is that 75 towers?
So there was some guy that came out on YouTube that basically put up that, and the city of Pickering kind of counteracted it pretty quickly and said, no, that's not the case. But last time I checked, I think 40 of them were actually approved to go up.
Wow.
We got to think
even that's a big number.
It's a huge number for Pickering, right? If we think about what Universal City is doing, Universal City is going to be doing 7 towers now? I think they started with 6 and now they're going to end up with 7 towers.
Yeah, and the Viewpoint.
Viewpoint is going to be doing 3 towers. I don't know if the third one, if they decided if it was going to be a condo or a rental, but like there is 3 towers that are going to be going up there.
And a Highmark.
And then you have the Highmark that's at Valley Farm and Kingston Road. That's going to be going up there. And then now even with the Pickering Town Center.
Town Center, yeah.
Yeah, Pickering Town Center. And guess what? There's so many other ones, like where that Bruno's is at, where is it? Kingston and
Altona.
Yeah, Kingston and Altona. Like that plaza's bought out. Yeah. I think that's almost a done deal that something's going to happen there. The plaza at Brock Road and Kingston on the north
the Toys
west
R Us
corner. Well, the northwest corner even, there's that Swiss Chalet and that Haka restaurant or whatever. That got bought out for a huge amount of money. And there's like a heritage building that they've actually proposed to pick up and move around the corner just so they can put up a tower there.
Got it.
Even there's that other one at, again, at Kingston. Yeah, Liverpool and Kingston, Liverpool Johns. I think that changed.
Now it's going to be a mansion.
Yes, exactly. Yeah, so that is got picked up. That's going to get picked up and I think moved around the corner as well so they can accommodate the towers that are going in. So a lot of cool things that are going up. And going back to interest rate and talking about where the economy is that look at the developers that are behind this thing. You think they're retarded? You know what I mean? They're spending hundreds of millions of dollars and they've been in the business for such a long time. Fine. Anything can happen. Right? Anything can happen. But these guys know what they're doing. You think they're going to throw hundreds of thousands of dollars, these reputable builders. I'm not talking about Joe.
And all of them are reputable builders.
I want to throw out some names of not so reputable builders, but I'm going to hold that to myself. But they're out there. You know what I mean? Am I going to buy into their project? Not a chance.
But think about how far ahead of time they started to develop this, or us starting for the permit. So they've seen a future in Pickering even 10, 15 years back.
Exactly. And guess what? If they're going to continue to work on these projects right now, guess where they think things are going? These are smart, big corporations.
Absolutely.
They're not just doing this and saying, oh, we might flop because the market's going to go down. I don't think so.
It's not like a regular average guy goes and build a house and say, let's flip it. Like these guys are like...
So that's a strong indication to me that the market is going to move forward, okay?
Absolutely.
The other thing also is that with government infrastructure money going into places, do you know what I mean? Like when we talk about Pickering even, and we talk about like that north area, like the Seton and Whiteville area, it's like they're putting tons of money into this thing. Like
even jobs. Like I saw a Bad Boy, Kubota, and I heard there's a Costco coming up. Apparently a bread company moving in.
Yeah, like the Wonder brand.
Like
a Wonder brand. I think they're doing a huge innovation center there as well. So I mean, like, there's going to be tons of stuff that's going up, and these guys have been around for a lot longer than I've been playing with real estate. So
they know what's happening.
They know what's happening, and I would say I wouldn't take it all like, oh, okay, this company's doing it, I'm all in. But you have to take signals, indications, like, hey, this developer is going, this CD is going, what's the history in resales and whatever else like that.
Absolutely.
So it's still all leading out to being a strong thing, especially when we see the inflation rate drop so much and the Bank of Canada is somehow getting this thing under control.
Agree.
So, I think we started off with interest rates and got into like how strongly we feel about the market is going to still continue to do good. And,
you're still going to get comments.
But the thing is, at the end of the day, it's not for everybody. And you know what? And the thing is that if it's not for you, I don't think you should feel bad. And, there's people out there like us that just want to try to build something big. And
look for opportunity.
And the thing is honestly, sometimes it's not all about the money. For me, it's more of the thrill of saying, hey, can I put this thing together? You know what I mean? Can I balance this thing out? And if people out there don't have that thing or don't want to do it, I don't think that there's anything wrong with it. But
absolutely.
At the same time, as taking a risk and saying I'm going to get some negative comments, don't complain about it either. At the same time, right? Like if you're not going to take any action, then don't complain about it. And the thing is, if you're not willing to fail, then don't cry about it, because how many times have you failed? How many times have I failed? How many times has Chris failed? Like we've all failed so many times before one thing has worked out. Like I'll just use this as an example, and it has nothing to do with it really, maybe, but like even quitting smoking cigarettes. Like I smoked cigarettes since I was in grade 7 or 8. Do you know what I mean? It took me, I don't know, 20 attempts to quit smoking cigarettes. To fully quit smoking cigarettes. You know what I mean? But that's the thing. Like if I want to build up a business, if I want to try to acquire rental properties, if I want to build a portfolio, guess what? I'm going to fail probably so many times. I'm probably going to buy the wrong properties. I'm going to probably mess up along the way. But guess what? I'm going to have to dust myself off and say,
restart again.
I got to redo this thing again if my will is strong enough. But
100%.
I think in this market, that's what it's going to take. And it's going to take you to be comfortable with what you're doing.
It's about who can weather the storm.
100%. Yeah. And again, at the same time, I wouldn't get into it because of a hype and say, oh, everyone's going to make tons of money and this and that. There's a chance you'll lose.
Yeah.
There's a chance you're going to lose. So maybe apply my casino rule to that. Walk in with $20.
Yeah.
And spend that $20
and forget about it.
And me at this point right now, I'm not even the guy that will put the $20 in there. I'm just gonna go sit and buy a drink at this point right now for $20. I don't even want to gamble. So if you have that same mentality as I do about the casino, about real estate, then maybe just keep your money and go on vacation.
Absolutely.
Yeah. Okay. Cool. So we're talking about all this and we're saying, hey, interest rates are high right now. We don't see an increase coming. Just to sum it up, we don't really see an increase coming up, and we'll probably see a decrease maybe midpoint somewhere in
next
2024, right? Probably not a massive decrease. We'll probably see it go down a quarter, maybe a half, and maybe consecutive drops to bring it down to possibly that 1.5% reduction.
That's what we're thinking.
So before I get on to my next topic, I want to talk to you about, so what would you recommend to people right now? Somebody that's looking to get a mortgage right now, what would you recommend in terms of terms and whatnot?
Based on what's happening right now, 1 or 2 year term. Not more than a 2 year term. There's some clients, they are very adamant they want to take a 3 year term. I understand where their risk tolerance is, come down the risk tolerance.
Yeah.
I personally will renew into a 1 year term, not more than a 2 year term.
Not more than 2.
Yeah. But when you take a 2 year term, you can do early renewal it depends on the lenders, 120 to 180 days. So technically you are taking a 1.5 year term.
Yeah, perfect. So like even I guess with the mortgage I got, I took a 1 year rate and a 1 year term, and I could probably renew that 9 months in possibly.
9 months in. So even if you take it 2 years, you can renew it in about 15 months instead of 8 years.
A year and a half.
Year and a
like
half.
You said, yeah. Okay, fair enough. Okay, so you're still recommending stay on a fixed product, maybe 1 or 2 years. Don't really go over 2 years.
But you'll be surprised the amount of people calling me to go on a variable.
Really?
Yeah.
But how do you think that's going to play out?
They're reading it and they're seeing there's going to be no rate hike, it's going to be a reduction, and some lenders do offer some lenders actually drop the payment. For example, lenders like Scotiabank who put the payment up, so someone's getting into the mortgage, their payment will be coming down.
Right. And their amortization will stay the same because their interest will remain the same.
Exactly, yeah.
Okay. But so just like at a high level, what is the rate difference right now? So if you went into the variable rate, people, what are you taking? 3 years, 5 years?
It's a 5 year variable.
5 year variable. Yeah. So, and what is that sitting at roughly right now?
It's
I know there's a range.
6.9.
6.9?
Yeah.
And I think I've even seen it at like with the 7 in front of it too, with the variable.
It depends on the lender, but the lowest will be about 6.9.
6.9. Yeah. Okay. And then 1 and 2 year fixed rates?
One is about 2 is about 6.26, 6.25. Like it depends on the lender.
Sure.
In the low 6.
Okay, in the low 6.
Yeah.
So, basic math, you're basically like even right now you're going to be 0.75% lower by taking a fixed
short
rate.
Term.
And then so I guess you got to kind of think about it and say, hey, do I really think in 1 year they're going to drop the rate by 0.75%?
That's why it's
like something like that. Yeah.
And also, there's some clients, they still want a 5 year fix. It comes down to the risk tolerance.
Yeah.
I just saw a couple of first-time buyers, they wanted a 5 year fixed.
5 year fix. That's also scary because if you're on a 5 year fixed rate, you got a huge penalty if you have to break that.
Especially on a declining interest rate.
On a declining interest rate, right? Because they're still going to want it at their original amount.
Exactly.
Okay, so cool. So we've covered off interest rates, where they are at now, where you think they're going, and what your suggestion is on in terms of like products to pick right now.
Yeah.
Okay. So my next question is this, and I think we're seeing some of these scenarios start to come up is where people just can't handle the payment anymore, despite their best effort or whatnot. They just can't handle the payment anymore. So what happens at this point right now? Like what is happening kind of like, what are the scenarios that you're seeing? Like I'll say like I have a scenario right now where I'm seeing is that, somebody just had a bunch of medical expenses that they weren't obviously expecting. Yeah. And they had to pay out of pocket for these things. They made some risky investments at the same time, something I probably wouldn't have got involved with and you probably wouldn't have. Yeah, got involved with. They made some risky investments where they basically lost 90% of their investment. And right now they're kind of suffering and they can't even make that monthly payment anymore. And the bank's on them to basically say that, hey, we don't want to deal with you anymore. We want our money.
Yep. So what I'm seeing right now in terms of delinquency, power of sale, mostly is coming from the private lenders. So the private lenders there are two kind of private lenders. One kind of private lenders, they are regulated by FISRA. It's called MIC. And other private lenders are anyone can be a private lender. You can be a private lender. I can be a private lender. And most of the unregulated private lenders, you can call them a loan sharks.
Okay.
So they don't want to work with the borrowers or the owners of the home. They don't want to give them a chance to bring things up to date. If they see there's a little bit of equity in the home, they know they cannot move somewhere else because the values has dropped. Keep in mind, someone is coming up for renewal in this year. They bought the property a year or 2 years before that. So the values are not there anymore.
Yeah.
So they cannot go anywhere. So they're back against the wall.
Yeah.
So they are pushing the power sale.
So these private lenders that you're seeing, like some private lenders that operate on the side of where they're not regulated, they basically don't care about the consumer at the end of the day.
They are looking at what's in for them. Right?
What's in it for them.
Yeah.
And even if they could extend a helping hand, they're basically saying, we're going to force this thing into a power of sale. Because it's more lucrative for them to go that route.
Absolutely. So those are the calls we are getting. It could be a first mortgage or a second mortgage.
But mostly on privates.
Most of them are privates. Then the other category, there are people, life changes, medical expenses, the payments has gone up. They are having a cash flow problem. Some of them are thinking about selling the home. Some of them are thinking about what are the options. I had a call, very high income. They were not too sure what to do. The realtor told the client, speak to me and see what are the options. I said, the best thing to do is let's look at all your debts. Let's look at all your mortgages. Let's see if we can help you to make the cash flow better. If the cash flow with the new payment, if you can afford to keep it, keep it.
Yeah.
If you think you can't even afford to keep it with the new mortgage restructuring, debt restructuring, then you might have to sell it.
So just explain that, because some people may not understand what you mean by that. So basically, a call comes in, they're high income family or whatever else like that, but they can't keep up with their mortgage payment. So your suggestion is to basically look at all of the debts that you're servicing and basically just kind of try to find a way, like a product or something like that?
No, it's like a refinance.
Okay.
Like, first of all, if you have equity on home, if you can qualify for a refinance.
So if they have, a $2 million property,
yeah,
and they got $1 million mortgage,
yeah,
maybe the best thing something to consider, maybe not the best thing, something to consider would be is like maybe you get a $1.3 million mortgage if you can qualify for it, take the $300,000 and pay off all your debts.
All your debts, and instead of going from a $10,000 going out of your bank account every month, probably you're going to have like a $7,000 or $8,000 going out.
And see if you can float it that way.
If you can float that way, exactly.
Okay. So that's kind of one of the solutions versus selling it.
Selling it.
Yeah.
And if none of them doesn't work out, probably you have to sell it. I think you and I had a client, he called me up and say he's losing the property. He said, I don't want to do a private mortgage. I don't want to do anything. I think the best option is to sell it.
Well, I think he's playing it a little bit safe right now too, and saying, hey, like I'm looking at what the payments are going to be and I can't float that payment, instead of just being brave and saying, hey, I can make it, and we've kind of know the numbers, and it's not a good idea to keep that property. I think we're both pretty straightforward in that way of where we can see an opportunity for someone to keep the property if they want to keep it. I think we can kind of advise them in that way. But when we see these kind of numbers and stuff like that, it just doesn't make sense for you to keep it anymore.
Yeah, when he called me the other day, I asked him, you can afford the bank payment. How can you afford a private payment?
Exactly. And you know what? Some people, what we find is that sometimes people say, yeah, I want to keep it just out of ego and stuff like that, but they get themselves into trouble after the fact.
I broke it down. Like, he's like, I'm done.
Yeah. Yeah. It just doesn't make sense to continue. So, look, I read an article, and I'm not sure that I believe that's what's going to happen, but it was by RBC. RBC came out and said that they can see like delinquencies go up by 30%. I think that's a huge number because
that's a big number, yeah.
I think I was on like a Canadian banker site, and they were basically showing like delinquencies, like mortgage delinquencies all across Canada was like less than 2%.
Yeah.
So that's a very small number. But
30% is a very big number.
That's what I'm trying to say is that are you going to get that far? And I find a lot of people are comparing this back to the 1980s kind of thing and saying, oh, interest rates are going to be so high and people are going to fold and whatever else like that. But the thing that I think people have to remember is that in the 80s, they didn't actually have that much equity built into their properties, right?
The demand wasn't there.
Yeah, and a lot of people right now do have equity built into their property. A lot of people do. Yeah. And there is a lot of demand still out there for properties. So I think that we are dealing in a different kind of a scenario. So there may be people like the client that we're working with right now that is going to be forced to sell, and maybe the bank is starting to take action, but that will never come up as a power of sale. Yeah. Because they're trying to get ahead of the game. Yeah. Do you know what I mean?
No,
and they have enough equity in there that they can kind of clear it.
Exactly.
And even walk away with a little bit of money. So
but the bad advice he may end up in losing more money.
Yes.
That's where you have to be careful. Like you have to do what's right for you, what's honest advice is.
Yeah,
that's why
100%.
It comes down to who do you work with.
Yeah, for sure, it's going to depend, and you know, like I'm the type of person, and you're the same way. Is like we would tell people, don't sell your property if you don't have to sell it, right? Keep it because we think it's a great investment. But like in this scenario, it doesn't make sense. We go through the numbers. It has to go to a private side. There's no way you can float this based on what the income is coming in on the property. It just doesn't make sense. It's best for you to take your 150K or 100K or whatever you're going to get, and then just try to take that money and
restart it.
Yeah, like maybe put it into Pickering condo. All right, like maybe put it into Pickering condo or something. But just generally, and I know that there's a lot of things that happen, but what happens, man? Like, when does a bank start to like say that they're going to repo your property? Like, how does this work?
So the banks are a little bit different than the private lenders or many other lenders. So even the B lenders, they're a little bit harder than the banks.
Okay.
So the B lenders start calling you in 30 days, like right away. If you miss a payment, they call you right away.
So private lenders, 30 days, they're going to start to call.
No, the B lenders, like a home trust. Yeah. They start to call you and say, what's going on? Can we work with you? Okay. I have seen Home Trust work with a lot of people over the last few months to keep up the payment. So they want you to be responsive. Don't dodge the call. Pick up the phone. Tell them what's going on. Give them a reasonable timeline to bring the payment up to date.
Yeah.
Don't tell them I'll bring the payment up to date next week and you don't have money.
Yeah.
So be realistic. Work with them. They can work in the back end to give you a little bit of a space to catch up. Okay. The banks, they also do the calls, but they don't do anything until the 90-day late payment kicks in.
So you got to miss 3 payments.
Yeah.
Before they're really
completely miss it.
Yeah.
Don't even make the payment.
Okay.
If you're late, they will still work with you. That's when you haven't made the mortgage payment for 90 days. That's on a high level. Like every situation could be different. But if you make a 30-day behind, that's a different thing. But keep in mind, when you are behind on the bank mortgage, it hits a credit bureau. Mm-hmm. So for you to go and do something is going to be extremely tough.
Yeah. So basically, like, let's just talk from a bank perspective, because I think majority of people have bank mortgages.
Yeah.
Okay. So if something is going to go wrong here, the bank was going to they're probably going to call you in that 30, 60, 90
100%.
days.
They have a collection team.
Sure. So they're going to be calling you. And then what happens? That 90 days, you're just not responsive. Or in some cases, I've heard people like trying to like argue with them. Yep. Right, and trying to be tough with them.
They're being emotional, right?
Yeah.
You cannot blame the borrower as well because they're being emotional. You really don't know what's the reason. It could be cash, it could be health, it could be many reasons, right? But the collectors, they are calling to bring the payment up to date. Yeah. I think at that point, that's where the legal steps in, and the statement of claim started to be issued.
So, and I'm not sure how much of it we can cover, but so basically you miss your payment for 3 months, and then basically their legal team gets involved at that point.
Absolutely.
And then they're going to send you a statement of claim.
To bring the payment up. So that means you had to bring the payment up to date.
So what is a statement of claim? Like, it's basically just saying that you got to bring up the payment, or you got to give us all of our money back.
I think give us all the money back.
Okay, so basically at this point, they don't want to deal with you.
They don't want to deal with you. They want to exit the relationship with you.
Yeah. But I know all circumstances could be different, but say in that 3 months that they're like, you've missed your payment and whatever, but you're in contact with them and you're trying to work something out. Like, do you think that they're going to try to work with you?
I think if you have a payment arrangement, I don't think so. It will go to the stage of that. So I'm kind of involved up to the statement of claim, because up from point of statement of claim, that's where the litigation lawyers steps in, right? You know what? If you call them, if you have a payment plans, if you ask them to move the payment dates, I don't think so. It will go to the point for the statement of claim.
So I guess the major takeaway from over here is that if you are experiencing trouble paying your payments, you should actually be super responsive with the lender. Communicate with them, and just try to your best to come up with a realistic time frame of when you could bring it up.
Isn't communication is always a
100%.
key for solution, right?
yeah, absolutely. So after the statement of claim, it really comes out of our hands at this point.
Then it goes to the lawyer. Then you have to get the lawyer involved. They need to speak to the lender to find the arrangement. Maybe that's why some clients try to sell the property, cash out whatever they can cash out before they put the power of sale.
Yeah, because correct me if I'm wrong, but if you have that opportunity to try to sell the property, if that's what it comes down to, you're probably better off trying to sell it out. If you have some equity left in that property, try to sell it out on your own before the bank and the lawyers get involved. Because once they get involved, I think that you lose the control.
And you lose the control of the property.
Exactly.
Like you don't have sheriff is going to come and change the property.
Yeah. So up until that point, you're in control of what's going on. So it's better to try to work with them. And then if if in that time you can sell the property, it's better for you to sell it yourself, because otherwise I think the fees add up at the same time, right? There will be more fees.
There will be more fees. So this is exactly the situation we are working with the mutual person. When the statement of claim comes in, that's why who do you go to get a real estate advice or a financing advice as well?
Yeah.
Some people can give you bad advice, and that's not your permanent solution.
Yeah.
And that can end up in costing you more money than what you could have saved today.
For sure. I've also heard, and you can shed some light on this, but if you're on a B lender or maybe even a private lender, these guys are notorious for just like running up the fees. I've even heard of like daily inspection fees.
Yeah, daily inspection fees. I don't think so. It's the B lenders. It's mostly the private
lenders.
Yeah.
So they will just kind of tag you, what, $100 a day?
No, it's actually, I have seen $350.
$350 a day for property inspection.
So their thing is an inspection fee. I really hope they go and inspect the property.
You think they're going?
These are fees.
So every day that you're not bringing this payment up, and every day that they have it on power of sale, you're paying $350 for an inspection fee.
Yeah.
That can get really expensive really fast. So I guess they just try to chew down whatever position that you would have had in the property.
That's why it comes down to who you got to know who you're dealing with.
Yeah. Okay. Fair enough. Yeah, I think that's basically it on what's happening in this mortgage. Do you have anything else to add before we close this
hopefully I hope we are right for September 6th.
Yeah, let's see. Hopefully it stays steady, and then we hopefully start to see a little bit of a drop starting next year. Nothing dramatic. I don't think it's going to be life-changing. If you're suffering right now, I don't think you should expect next year to be any better.
Yeah. Maybe the same pain. The pain is not growing next year.
Yeah, hopefully it just doesn't get worse. Like that wound doesn't get deeper.
Yeah, exactly.
Yeah, that's it. All right, cool. Thanks a lot for being on.
Yeah.
We're going to put Varan's information up. You guys should definitely reach out to him if you guys have any questions about your mortgage renewals, or if you get into a jam. I think, just to contact a proper realtor that can give you real honest advice. And also, like with Varan, you should check with two people. You should check on the financing side. You should check on the real estate side of what your options are if you're starting to get into a pinch. In my personal opinion, if you contact someone like Varan, he's going to be someone that's going to tell you that, hey, these are the options that you have, versus trying to push you into a product that may end up costing you more and might even get you into trouble in the future. So contact professionals that are really looking out for your best interest at the end of the day. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.